Hello and welcome everybody to today's Commodities Corner presented by myself, Phil Carr at the Gold and Silver Club. So today guys, we will of course be covering live market analysis. We will go through a watch list of trade opportunities that we see over the course of today. And as we head into next week as well, we'll go through a forecast of where we see commodities heading, how we expect the markets to move, and of course, as always, we will be answering questions and providing live support. So just before we get started, a quick disclaimer for you to have a look at, and we will get right into it very shortly, guys. Okay, perfect. So let me introduce you to the Gold and Silver Club. So the Gold and Silver Club, as I'm sure a lot of you are aware, is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldandsilverclub.com. Okay, great. So with that said, guys, we shall get into it and we'll talk you through the developments in the commodity markets and what we're really expecting now as we head into next week. So the big news announcement that a lot of traders were waiting for this week has been the minutes from the FOMC. So you get 8 Federal Reserve statements every single year, and 3 weeks after the statement, the minutes are produced, and the minutes are also watched very carefully to see whether we will have, in particular at the moment, the main focus is regarding an interest rate hike and to see what the members of the FOMC are going to go ahead with. So this week we saw a weaker US dollar. We saw the dollar index breaking down to 7-week lows. With that, it provided support for commodities. We saw on Wednesday gold rising for a 4th straight session into Thursday, supported by a weaker dollar after the minutes from the US Federal Reserve's July meeting showed several members expressing caution over hiking interest rates soon. The minutes showed the members of the Fed were generally upbeat about the US economy and labor market, but several said any slowdown in future hiring would argue against a near-term hike. So what did that cause the markets to do? Well, essentially we saw up until the close actually yesterday, gold again had its strongest close since the non-farm payrolls at the beginning of the month. So it was looking quite good here for gold. In fact, we've got some major overhead levels which gold is trying to break out from, which is at $1,360 US, which we'll take a look at on the chart very shortly. Now you might be wondering, for those of you who might trade gold or the US dollar, why gold didn't break out overnight or why it hasn't had the full-on move that we've been looking at over the last week or so. So we had 2 more FOMC members speak yesterday, and both of their comments yesterday were again in support. Now, a bit of a change of tune from the minutes from the FOMC from Wednesday. We're in support of a potential interest rate hike yet again in September or December, stating that they needed to wait for further data to come out from the US in order to be in a stronger position to do that, but they changed their tune a little bit from the minutes of Wednesday's FOMC. So what did we see following on from that? Well, essentially overnight, the US dollar has retraced. It starts to go up. It's put pressure on gold and silver. Now, at this point, it seems very unlikely that the Federal Reserve will go ahead and increase rates at their September Federal Reserve meeting, which is due to take place on the 21st of September. However, even the hinting of it does create volatility in the markets and put pressure on the metals. So we'll have a look at that very shortly. on the charts. Gold currently trading at $1,345 per ounce, back in its supportive territory where it could actually look good for a buy here, and I'll talk you through that very shortly. Also, I'm sure a lot of you are aware, and if you're not aware, you will be now, that oil has got back above $50 per barrel, which has been an incredible move. We've seen oil move over 20% so far in August. Last week, oil moved up 14%. So you have to remember, if you look at where gold is up overall this year, gold's up 27%, silver's been up 46%. In just 1 week, oil moved up 14%. So that's an incredible move. We've seen that, and we discussed that on the previous Commodities Corner, that we've seen a good move on the prospect that oil producers will be discussing output freeze in September. We saw oil jump on comments that Saudi Arabia was ready to help stabilize the market. Essentially, they have reached their aim, which was to get oil back up to 50, and that's been an incredible move, because if you remember just a couple of weeks ago, we saw oil trading at the 40 level, and already it's back up to 50. So we did say that August can be explosive for commodities. Certainly over the last couple of weeks, oil has been the beneficiary of inflows. We've seen some big moves on oil. Investors continue increasing the bullish bets on oil. Combined WTI and Brent net long positions jumped 389,000 contracts last week. Open interest soared to the highest level in 10 years. We continue to see hedge funds investors buy into oil over the last couple of weeks. And we've essentially come off now the $26, which we hit earlier on this year. We're now up 75% from those lows. So we've seen some big moves in the energies complex over this week. Now, of course, in terms of the positions that we've taken, I'll cover our top trade over the last week, which of course has been Brent crude oil, taking advantage of a retracement to the 50% Fibonacci level where we hit. That level also was a 200-day moving average, and since then we've managed to continue to follow through. Now, the great thing about binary, of course, is that you don't need to worry too much about a stop loss. So often oil is it's a volatile market, so day to day it can have quite a lot of volatility, but for trading on binary can be perfect for this sort of a trade. All we went in for was a rise trade for the price to be higher than 44 USD and per barrel, and of course we're currently trading around 49 US dollars. So it's been a nice little move over the last week and a half here. So with that said, let's get into it. Let's have a look at the trade opportunities which are lining up. At the moment, we will be looking at the higher and lower type of trade. If you select higher, you win the market payout. If the price is strictly higher than the entry price, if you select lower, you win the payout if the market exit price is strictly lower than the entry price. So essentially, what this involves doing, I know a lot of you on this webinar are very used to taking these sort of trades anyway, but just in case you are a newbie and you haven't traded on binary before, or you just want to get an idea of what I mean by this, essentially, when you are looking to take a trade, when you're looking to take on a contract, you will be looking for the price either to go higher or lower. So it's just a case of we are doing our analysis in the market, and then we're picking the direction. So, for example, if we wish gold to be higher, we would go for a higher trade. Then what we need to time is our entry in the market, and then we need to also time our exit. So we just need to look at what time frame we want to be out of the trade, how much if we want to do that as a day trade, be in and out the same day, or whether you want that as a swing trade to be out by the end of the week or the following week. Okay, perfect. So with that, I'll explain that when we're actually looking at the trades there as well. But with that, we'll move over to the technicals. As always, guys, do keep the questions coming. Feel free to put those into the chat, and we will go through those. Contributions are always valued, so feel free to ask any questions as we continue with the analysis. Okay, so let me just put you over to my charts. We'll start off with gold. Righty-ho. Okay, you should be able to see this very shortly. Let's just tweak this. Okay. Okay, guys, so I'm just on the gold chart at the moment. Let me know. Hopefully you can still hear me okay. You haven't lost sound, and you can see my chart okay as well. Fantastic. Thank you, Sharice. Okay, brilliant. Right, so we'll start off with the gold chart here, and a few points to note at the moment. So gold, if you have a look at it, based on the closes, yesterday was quite a high close for gold. In fact, the last 3 closes, we've continued to have strong closes on gold. We broke out of a pennant formation. Yesterday, actually, we closed right at 1,352 US dollars per ounce. So it looks set that we could get a pop overnight during the Asia Pacific session to breach through resistance and get some follow through. Now, comments from John Williams from the Federal Reserve yesterday. He was speaking at 9 o'clock London time, and previously he had put out a statement earlier on in the week, which was essentially he was more in favor of not going ahead with an interest rate hike and just data dependency in terms of moving forward. He changed his tune yesterday on the speech following on from the minutes of the Federal Reserve, where we've seen the US dollar break down to 7-week lows. We've seen support for gold, silver, and essentially he was again more supportive of the potential for an interest rate hike as soon as September. And that, of course, has caused, again, the US dollar has gone up. So you can see here we've retraced overnight, and we've seen some pressure on gold and silver. Now, in terms of the price structure of gold right now, it's still in favor of the bulls. So the buy side does have the technical advantage right now. We are still creating higher lows on the chart, and in fact, one point to have a look at here is the fact that even though we have had a few dips in price every time, in fact, let me see if I can show this a little bit more clearly to you, we are coming against the same level of resistance every time, okay, which is at 1,356. However, the lows where the price has been driven down to are higher here. So each time gold is being driven down, it gets driven down to a higher price. Here was the low that we put on the minutes of the FOMC. So you can see that even though the pullbacks that we're getting at the moment, we haven't seen a break above resistance, we are kind of developing this wedge at the moment where we might well just see more pressure get put to the upside here, keep creating higher lows in the tighter time frames, and eventually we will crack above resistance and we'll just have a nice breakout. But it is taking time. We're in peak holiday season at the moment. Markets are a little bit slower. We've got no major news announcements coming out over the course of today. Actually, we've got a number of news announcements coming out next week, which I'll talk you through very shortly. But essentially, gold is just consolidating. Nothing major here. It's just pulling back again to the lower end of its trend channel here. But the more tests that we get of resistance, we keep on getting moves back up to 1,356, around that zone to 1,358. We're liable to break through, and then eventually we could get a nice breakout and follow through. Now, where we are at the moment, we're coming back down to the supportive zone of the pennant formation. We continue to build high lows in the chart, overhead resistance at 1358 to 1360. We do need to breach that level in order to get more upside here, but we might well just see this level get supported over the course of the US session today. So that's what we're looking at with gold right now, and I'm sure a lot of you who like trading gold, that is something to bear in mind, and just keep an eye on the fact that we are developing these high lows. What would concern me with gold would be, for argument's sake, let's say gold continued to break down today, and if it got a close below the 1330 zone, that would be concerning. If it did get a major close below this level, I think it's very unlikely, but if it did continue to fall, broke through these trend channels, and the sellers were able to drive the price for a close below 1330, then yes, I would be concerned. But right now, nothing really too much to be worried about. For those of you who are on the buy side of gold, we're just seeing higher lows in the market. I'm looking for a breakout above resistance either today or as we go into next week. And we can have a look at that in terms of a trading opportunity shortly. The US dollar. So during our sessions throughout the week, some of you guys on today's session will probably be aware we've been looking for the US dollar to come down for a retest of the 94 level. That has been hit yesterday. A little bit of a retracement this morning, nothing really too major. Again, no major news announcements coming out today unless we see some geopolitical news, something which is unscheduled come out. Other than that, we haven't really got too much going on. We'll probably just consolidate here for the US dollar. For more upside for the metals, we would like to see the US dollar hover slightly lower here, just come back for a retest of 94, potentially breaking down from that level. Palladium is worth a look as well. Palladium did get a nice pop to the upside yesterday on a weak USD. On the US dollar breaking down to 7-week lows, we saw a pop to the upside for Palladium. I do like the price structure of Palladium here. It has had a really good run, especially over the month of July. We had some incredible gains. In fact, last week we saw Palladium breaking out to 14-month highs. We saw a 7% move in one day. That was a good pop. And you can see there's a lot of underlying support. So I'll come back to Palladium shortly. I still like the price structure. of palladium. Also, if we go over to oil, you can see where it's ramped up. In fact, let's just put it onto light sweet crude oil, bounced off the 50% Fibonacci level. It's had a good little run up higher over the last week. Well, I say good, it's been phenomenal. It's moved over 24% now from the lows here that we put in just at the beginning of August, and that's in 2.5 weeks. That's been an impressive move. You can see it's running out of a little bit of steam. It is coming into overhead resistance here on oil, into this consolidation zone. It's essentially, especially on Brent crude oil, it's reached the targets that a lot of the Middle East were looking for to get really to drive oil back above $50 per barrel. Now, those of you who've been following the Commodities Corner for a while now, you will be very aware that we've been discussing this in terms of our oil analysis, that we were looking for a corrective move once we came up to the highs over June. We were expecting a move to last potentially up to 2.5 months. That is exactly what has happened. We hit the 50% Fibonacci retracement level, came down to this major underlying area of support. That was just 2 months and 1 week. After that area, we've ramped back up again for the second leg higher here. Again, there's never been just one single leg up in an oil bull market. You always get this first leg up, a corrective pullback, which can last up to 2.5 months. You get the second run up. I am expecting $52 per barrel to be taken out here. In fact, we're getting very close to it on light sweet crude oil. It won't only take really a 300-point move or $3 move to breach above those levels. I am expecting higher prices here for oil. But in the short term, it's had a pretty decent run up, 24%. In just about 2 weeks or so. I would expect some consolidation now of these gains, and we'll continue to monitor it as we go into next week. What we would like to see now is a retracement and a pullback, and then get back in on the next leg higher. I have been asked, can we short oil? Do you think it's too overextended? Could you look at a sell short opportunity? Potentially, we're seeing a bit of a doji at the moment. If you're going to short it, you need to break it down into tighter time frames here. I would go down just into the tighter time frames, but overall you're going against a major bull trend at the moment, so you're going against the momentum of the market. So I would just be a little bit cautious of going against this. I would rather wait for a pullback, a corrective pullback, come back to support, and then from there look to re-enter long, because overall we're looking for buying opportunities here for oil rather than trying to sell it. So we're just waiting really for that pullback to occur, and then we can look for our next opportunity to get back long on this market. So definitely I would keep gold on the radar, especially we're coming into a lot of underlying support at the moment. So I would definitely have that on the radar there. We can look at a trading opportunity on that. Probably this is right back into the support zone. 1,330 up to 1,340 has been a good zone to look for buying opportunities. So we can come back to that and have a look at a trade on gold very shortly. We'll just move it over, and we'll also have a look. Yeah, platinum as well is worth a look, because platinum's coming back down to its 23% Fibonacci level, which is currently sitting at $1,100 per ounce. It's definitely a nice area of support at that level. That is previous resistance turned into support around that zone. But with that, I do see gold as the best opportunity right now. So very simply, we're going to go for a straightforward trade here on gold. I'm going to look for just a trade in order to be out of this by Monday's close at the moment. So I'm just going to see if I can get my deal ticket out here, and we'll just go for that start time now, see if we can get the days out for Monday the 22nd. Okay, let's get my deal ticket ready. Okay, so essentially you can probably see it here. I'm just taking advantage of a support zone in the market at the moment. So we've just come back down to this supportive layer. You've got it higher lows. It's a slightly tighter time frame. Based on the daily, we've got support. It's just coming back into a major area of support where we continue to get buying at this zone, back in about 1,342. All week we've been bouncing off that level, but essentially we're just creating higher lows in the chart. You can see here, got a lot of overhead resistance, about 1,356 up to 1,358. So I'll go for that. I'm just looking for the duration to start now. It's quite a nice price at 1,343. I'll look to be in and out of that by Monday. So it gives the trade enough opportunity to get going between now and the Monday close here as well. So with that, I'm going to go ahead and just take a trade Okay, so here's the criteria of the trade. Looking for the price here, 1,084 US dollars is the deposit on the trade for a $2,000 payout. Duration is going to be 3 days. And let's have a look at that. Okay, it's all good, 1,343. Okay, we'll go ahead and purchase that contract. Just double check everything's good. 84.4% payout. Okay, perfect. Okay, good. So that has been executed. So I've just gone ahead, actually got a pretty good price there, 1,343. So I just signpost that on the chart there. All I'm looking for is the price to close higher than that by the close on Monday next week. Okay, so I've gone in for a gold position. You can see there's a lot of underlying support with this market at the moment. It's just coming back for a retest of that area, which is common to do during the UK and the European session. America will be online in just over an hour and a half. If they buy this pullback, that will move quite nicely into the close today and as we head into next week. Now, I will talk you through the major news announcements which are coming up over September, which if you've got a diary handy, you just want to make a note of this or your trading journal. There are several major news announcements to be aware of as we move into September. September is proving to be a highly, potentially lucrative month with a number of major news items. Now, before I go into that, we get asked a lot how you can get access to our trades, not just during the Commodities Corner, but of course during the week as well, how you can become a member of the Gold and Silver Club. So essentially, if you would like access to highly profitable live trade ideas shared with you, ready to implement, all you need to do is go across to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP to get exclusive access to our private members live trading room. Okay, so that's all you need to do, guys, www.jointhegoldandsilverclub.com. Who is the live trading room for? Essentially, whether you're a new trader and you really want to develop a solid understanding of the markets and fast track your results, or even for those of you who might be more experienced traders, but you really want to take your trading to the next level, or it might be in particular you want to take your commodities trading to the next level, this is exactly what you get as part of the Gold and Silver Club. So you get access to our live trading room webinars, which are exclusive to the Gold and Silver Club. You can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, picking out highly profitable trade setups, share exact entry, exit points, stop loss targets, as well as talk you through live trade ideas ready to implement or take profit targets for instant results. Also, you get trade notifications via email, SMS, real-time trade notifications alerting you when we are entering, exiting trades. Ensure that you get all the setup sent out in advance notice and that you have plenty of time to get into trades with trade reminders as well to get in at the best possible price. And also you get access to our commodity research and market insights. So private members get access to our proprietary trading research to boost your win rate and ensure you are on the right side of the trades. Our trading research is there to give you the ultimate edge in the commodity market. So again, everything that you get by being a member of the Gold and Silver Club includes exclusive weekly live trading room webinars. You get live trade setups ready to implement for instant results, real-time trade notifications by email and SMS so you don't miss any profitable trades. You get the weekly trading plan and watch list of trade ideas for the week ahead, exact details of where we are entering, exiting, placing our stop loss on each trade, as well as live trade support to help you through each setup, and institutional level trading research and commodity insights to give you the ultimate edge in the market. So again, guys, all you need to do is just go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, fantastic. So with that, let me go through the major news items that you want to have on your radar, guys, as we head into next week. Okay, so pen and paper handy at the moment, and I will go through this with you. Okay, so as we go into next week, a major item which you want to have on your agenda is Janet Yellen is speaking at Jackson Hole next Friday. Typically, that is used to drop some bombshells regarding the Reserve, and also interest rates. So I would definitely pay attention to that, because it could be used as an opportunity to really move the markets. That is Friday, the 26th of August. A lot of traders will be watching for that, especially for comments regarding potential interest rate hikes. So I would definitely have that on your radar. So that is next Friday. Okay, that's a major news item. The following Friday after that, of course, we have non-farm payroll. The non-farm payrolls will be on Friday, the 2nd of September. And the following week afterwards, on the 8th of September, we have the European Central Bank announcements, which can be a big mover as well. It can cause big moves, of course, in the euro, but also the US dollar, which can have an indirect effect on gold and silver. The following week, we have the Bank of England on Thursday, the 15th of September, which can also be a big mover for the US dollar, of course, the pound, and also commodities indirectly. On Wednesday, the 21st of September is the big one. You've got an FOMC statement, which typically the September FOMC statement can be a big mover for the market. So out of the 8 FOMC statements that we have over the course of the year, the September one tends to be one of the largest market movers. And we've also got the Bank of Japan as well giving an announcement on that day too, which could see the markets move significantly. And as we come towards the end of the month, we've also got, actually that's more for those of you who trade the grains, but we've got some grain stocks report on Friday the 30th of September, which moves the agricultural markets a lot. But as you can see, pretty much from next week onwards, we've got a major news item every single week up until the end of September. So it's going to provide some good trading opportunities, guys. And again, if you do want exclusive access to our private members live trading room, just go to www.jointhegoldandsilverclub.com. Okay, fantastic. So with that, I wish you all good trading, guys. Have a fantastic weekend, and we will talk to you very soon. Okay, thanks, everybody. Take care. And of course, as always, we very much look forward to hear from those of you who will be joining us at the Gold and Silver Club. Okay, great stuff. Take care, guys. Bye-bye.